All right, Rupert, I'm looking at the chart. I mean, you saw the chart, right? You saw the big drop off. I mean, the stock lost a quarter of its value after earnings. What are you seeing here to name it a top pick? Is this about valuation? Is this you saying that it's just hit rock bottom? I mean, what's the upside here in your mind?
Yeah, so valuation here is very attractive. So, Target is trading close to trough valuations. You have about a 3.5% dividend yield. And we look at the issues that they face in Q3 as a good portion of transitory. So you had some issues around the port strike where they had higher freight costs. And then we've all seen in the Northeast, markets like Las Vegas, really unseasonal weather out there. So that weighed on their apparel business and really backed up their inventory. So, as we look past this quarter, we think they've de-risked numbers for the Q4 holiday season. And at some point next year, we do think discretionary categories will do better. And Target, compared to Walmart, is more exposed to discretionary categories such as home, apparel, beauty, etc.
You're making a good point there about the discretionary story. So then I have to ask you this news that we're getting today: the president-elect wants to increase tariffs on China, Mexico, and also Canada. Does that change your thesis at all? Does that change the outlook when it comes to Target? I'm sure you know just as well as most people do, a lot of these discretionary things, they come from China.
Yeah, that's correct. So it's still unknown in terms of what Trump is going to do for tariffs. So we've heard 60% tariffs on China goods. Now he's saying 10%. Now we're getting 25% Mexico and Canada. So I think it's really uncertain in terms of what he does. If we do see tariffs, Target will be impacted just like other players. I think they'll manage it through it over time through raising prices and maybe even shifting their own production to other markets. But yeah, I don't think Target's any more of a victim than other players out there, and I think they will manage through that. But the key message is still very uncertain at this point.
All right. So, by the way, I think you know this is already a contrarian call. The rest of your peers, when it comes to Target, their price target's about 142. Again, you're way above the street average. You may be the most bullish on the street right now. I want to talk to you about a story that we've seen just across the retail sector, the so-called stretched consumer. How does that work when it comes to Target? Walmart seems to be able to hedge some of that distress on the consumer because they have a big grocery business. What does Target have that's going to get through this seemingly rough period for consumers outside of the holiday season? The holiday season expected to be strong, but beyond that.
Yeah, so I think, their beauty and food and beverage business, which is about half their business, is doing well. You saw 2% plus traffic in stores this past quarter. So we really are waiting for discretionary categories to get better. And our view is that'll happen late next year. At this point, numbers are very de-risked. We think numbers have bottomed for this year. They're very conservative with the Q4 guidance. As I look out to next year, I have an 885 number, which we think is very conservative. So our call here is that you have a trough valuation, very low expectations, and we think earnings will eventually start to move higher. And this is a name that trades at a really sharp discount to both Costco and Walmart and versus itself. So I think next year, if they hit our numbers, we think you could see multiple expansion. You have a nice dividend yield while you wait, and our base case is 165, but we're using a very conservative multiple. And in a really bullish case, this could be a $180, $200 stock over the next 12 to 18 months.
So we're talking a lot about Target again. A very bullish call by you on Target. I want to talk about the rest of the retail sector. You also cover Costco. You also cover Walmart. The idea of these tariffs, how do you see those impacting these other big retail names and some of the other retail names in your coverage area?
Yeah, so for Walmart, about 2/3 of their production, sourcing comes out of the U.S. market. So I think they're okay from that perspective. They may have about 10% from international markets. So Walmart, obviously has a lot of leverage with their vendors. I think they're going to be fine over time. And then Costco, historically, if you go back to the last tariff situation, I mean, they're very able to manage that very easily. And Costco has a very limited SKU assortment. So if you do see higher tariffs, they can very easily manage around that and maybe, source different products. So really no worries for Costco or Walmart on the tariff side. I think both companies will manage through it. And, typically they're the last to raise prices. So even if you see others move prices, I think, Costco and Walmart could actually gain share in that type of environment. So really no concerns there. And, I think the reason why you're seeing Costco and Walmart near all-time highs is because investors are not worried about tariffs. They think they can continue to deliver the top line momentum and the strong bottom line growth. So, we're not worried at all about Costco.